S&P committee doesn't tell you why they don't select a company, but I do think it was a closer call than the market was assuming, mostly because, first of all, does the committee want to defer to the market's momentum here in creating a $450 billion company that had quadrupled in price year to date without knowing necessarily if this four-quarter streak of earnings is really something you can project into the future, and not necessarily knowing what the impact on the overall index is going to be. I think big in the minds of the people making this decision probably was the inclusion of Yahoo back in 1999. Yes, Yahoo probably belonged, but it represented kind of, a little bit of a ladder moment in that tech rally. I also think it really does reflect the overall dilemma here that investors have, which is, do we assume that this move in the huge cap tech stocks is the market's way of telling us that it figured out exactly what the digital future is and these guys are going to own it? Or is it a little more froth? And obviously, we've seen some of that get skimmed off in the past week or so. And
Mike, some are asking if the index committee just wants to make sure that names that get in the S&P 500 haven't made all their gains already. So they look at a Tesla, they look at a Zoom, or I'm sure you can think of others that are left out. And I think that sounds great and everything. But, I mean, who's to say that they know? That's what's interesting to me about this. I mean, if the index committee knows when the bulk of the gains have already been made, then they'd be great traders, and maybe they are. Maybe they just have the right sense about this.
Well, yes, although I don't think it's as simple as the committee got a little bit of sticker shock at the price and how much it was up. I think if basically Tesla was fabulously profitable in an unambiguous way, and the market was simply reflecting that, I think the committee would probably say, get in there. But what did we see in the last week or so is we saw them dangle a $5 billion equity offering, Tesla. And yes, maybe it just was fortuitous timing. Maybe it just happened when overall NASDAQ was going to buckle anyway. But that's only about 5% of the amount of Tesla stock that traded over the 3 days they were making that sale. And look what happened to the share price. So they would theoretically probably would look to offer more in conjunction with an index inclusion. And maybe it's just a matter of we're not sure we want to make this one of the top dozen holdings at this valuation when we still don't know ultimately if it's as profitable as it's said it is in the last 4 quarters.